to raise additional capital. On August 12, 2020, we published our prospectus, which outlined key information about this investment opportunity. In today's session we will highlight some of Barita's key strategies and pillars, information about Barita's recent financial performance, and most importantly, why we're here today to talk about our upcoming APO. Barita Investments Limited is a publicly traded company on the Jamaica Stock Exchange. It is 76.5% owned by Cornerstone Financial Holdings Limited and is domiciled in Barbados. It was founded by Rita Humphreys Lewin in 1975, and we have the distinction of being one of the oldest stock brokerage firms in Jamaica. Barita Unit Trust Management Company Limited is a wholly owned subsidiary of Barita Investments Limited. And that's where we have our unit trust products, which span fixed income, equities, and real estate. Our brand personality is communicated in 3 distinct traits. We consider ourselves to be bold, smart, and game-changing. Simply put, we have built a team with some of the best and brightest minds. We blend intelligence, innovation, and insight for our clients. We are unafraid of change and technology. During this presentation, we hope you will see why it is that we consider ourselves to be game-changing. Ladies and gentlemen, my name is Therese Kettle, Vice President, Investment Banking, and today joining me is Mr. Ramon Small-Ferguson, Vice President, Asset Management and Research, and he will be taking you through the presentation. Thereafter, we welcome all of your questions. Ramon?
All right, thank you very much, Therese. All right, so as Therese said, the purpose of this press conference today is really just to have a discussion surrounding one, the recent history of Barita from a financial perspective, and 2, to have a conversation around our impending additional public offering of shares, and of course to field your questions there too. So on the screen you will see a 4-pronged strategic pillar, right? Our set of strategic pillars, and really post Barita's acquisition by Cornerstone, we've really been focusing on growing the business, and these are kind of 4 mantras that we have been emphasizing. Right? One is talent acquisition and retention. I mean, Therese spoke earlier about our brand identity. We consider ourselves to be bold, smart. We consider ourselves to be game changers, innovative, and to that end, the products and services that we offer as a company are fairly widespread, fairly homogeneous, you would call them. And really, we think our key differentiator as a company is our people. It's the ideas that they have, it's the relationships that they bring to the table that allow us as an organization to succeed. Secondly, we've really been focused on increasing our brand awareness. I'm sure you would see our enhanced brand presence as an organization via both traditional and newer marketing channels. And what that has allowed is a re-engagement of a lot of our customer base, persons who would have done business with Barita over the years, who may have, kind of slipped by the wayside. They're back with us. And we've also been engaging a lot of new customers over the last 24 months or so. Thirdly, we've focused on increased capitalization, and that has really given the business a lot of capacity to grow, which is evidenced by our financial performance, which I'll get into shortly. And it has allowed the organization to pursue new avenues of growth, so new business lines. Finally, as an investment company, we have focused squarely over the last couple of years under the new management of the company on streamlining our investment management and trading architecture. And that has really benefited ourselves and our clients in terms of both the performance of our company as well as the performance of the products that we offer to our clients. Right? So moving ahead to the financial performance of the company. So the presentation today on financial performance is going to be centered around our 9-month period to June 2020, right? So from October last year to June of this year. And you can appreciate that this performance has been painted against the backdrop of the onset of the unfortunate COVID-19 pandemic and the effects that it has had on economies and financial markets all over the world, including in Jamaica. I mean, the pandemic has really changed how we do business, how we interact with our customers, how we relate as a team. You see how far I'm sitting from Therese. And it has also kind of forced us to pivot as an organization. It has really brought out all of the creativity and the ingenuity of our team. And we're happy to report for the 9-month unaudited period to June 2020, we've managed to both preserve and create value for our shareholders and our customers. So if you see on the screen there, you will see our revenue profile. Our revenue was up almost 35% year over year, and you can see the breakdown there. The revenue picture really reflects greater diversification year over year. You can see that the major contributors to revenue were split reasonably across the different categories. Fees and commissions income, which is largely driven by our asset management business, our investment banking business, and our brokerage business, is up over 90% year over year to almost 1.4 billion. Our foreign exchange trading and translation gains, which emanate primarily from our Cambio business, is up over 300% year over year to 430 million, while our gain on sale and investment activities, which really relate to the management of our portfolio as a company, is about flat year over year. I mean, down 100 million or about 7% or so. But we think that is a reasonable performance given the fallout that has occurred in several sections of the financial market during the period. Finally, net interest income, which is our main source of revenue for securities dealers in Jamaica, is up over 90% year over year. So moving ahead. So that performance on the revenue line translated to a 40% plus increase on the net profit line to 2 billion. This is a record 9-month performance for us from a profitability perspective, and that $2 billion in profits that we were able to generate for the first 3 quarters of this financial year actually eclipsed the full year performance for financial year 2019. So we did 1.7 billion in the full financial year 2019, and so far for 2020, we have done $2 billion in profits, which we think is accreditable for performance under the circumstances. Moving ahead, Therese. So this slide really just highlights a few things, few items on our balance sheet. In terms of total assets, that figure is up almost 70% year over year to $52 billion. So we've reached $50 billion for the first time. Shareholders' equity is up almost 65% year over year to 15.2 billion. Again, a record level for that measure. Total investments, which really represents the lion's share of the investments that we hold on our balance sheet, is up year over year by almost 60% to 41 billion, while our repurchase agreement liabilities, which really relate to repo deposits that customers make with us, are up almost about 57% year over year to 30 billion. So to get to the matter at hand, which is our additional public offering of shares, right? Now, in summary, the terms are as follows. So we're looking to raise a minimum of about $9 billion in additional equity capital with the option to upsize the offer to up to 13.5 billion should we choose to do so. It will involve the issue of new shares at prices between $49 and $52 a share. And that range really relates to the different investor groups to which we've offered different prices, right? And I'll get into that in a second. The APO is intended to open on the 26th of August and close prospectively as late as the 16th of September. And, at a very high level, our intended use of proceeds involve adding further capacity to the business to really focus on the transformational growth initiatives that we have in the pipeline. So just to double back to the prices, we have decided with this offer, being very mindful of what's going on in the economy and what's going on in the financial markets resulting from this unfortunate pandemic. We've decided to offer to prospective investors within different categories who we believe have seen an outsized impact from this crisis, discounts to the offer price. So the general offer price is $52 a share, but $49 is being offered to the group of investors who we've defined as small investors. We recognize that investing capacity has fallen because of this crisis. Persons have lost their jobs, persons have lost money in the market. And as a result, we are offering investors who are looking to invest between about $15,000 or so and $50,000, a price of $49 a share. Right? We're also offering a special price of $49.75 to a captive group of persons to include civil servants, hotel workers, our nurses, our teachers, doctors, who are really, kind of at the heart of serving us during this period, which is very unprecedented and really, has reached all areas of society. And finally, $52, as I would have mentioned, is the general offer price to the market. Right? So moving ahead, respecting very broadly how we intend to use these proceeds, the proceeds from the offer. So I would have mentioned that Barita is in the investment banking business, which really involves us raising capital across the spectrum, be it debt or equity, for our customers, being largely companies and in some instances countries and projects, both in Jamaica, within the region, external to Jamaica. Right? And this business is one that we think is a potential high growth area for us as an organization. Therese is responsible for our investment banking thrust. And really some of the proceeds from this offer will go to bolstering our capacity in that space to allow us to do bigger deals, to do more deals, and to do different kinds of deals within that business. The company is also in the midst of a digital transformation. The fact is that this pandemic has done many things, but among the effects of the pandemic has been the fact that it has pulled forward the adoption of a lot of technological channels in terms of persons accessing products and services, right? So as an organization, we are striving to become an omni-channel provider of financial services. We want to be able to serve you physically or virtually, so it will really remove the borders from our business, right? And some of the funding from this offer will go to adding capacity to our technological infrastructure architecture. Thirdly, we have several new investment strategies and products that we're looking to pursue. Some of them are already in train, and the funding from this offer will simply add scale to those strategies and products, but some are in the pipeline and need to be seeded. So some of the funds from this offer will go to bringing those things to fruition and making them a reality. Finally, the organization has been growing very significantly over the last couple of years organically. We have expanded our share of wallet with some of our customers. We've expanded our customer base, and we're really looking to set up our infrastructure, both digitally, as I mentioned before, in terms of the tech, but also there are a few physical locations that we think we need to add within Jamaica to really allow us to deliver the optimal customer experience to our customer base. Additionally, we have aspirations to move outside of Jamaica to bring our services to the region in the initial instance. And the offer that we have on the table will endow us with capital, which is necessary to achieve those aspirations. So we intend to expand our footprint both in Jamaica and potentially external to Jamaica as we look ahead to the future for the organization. And with that, I think we have come to the end of this brief presentation. I see another member of the media in the lobby. We can let him in, Therese. But we will invite questions at this juncture. Thank you very much.
Good morning, Neville Graham from the Gleaner.
Good morning, Neville. How are you?
Neville.
Very good, thank you. And I trust I find you well too.
Yes, we're well, thank you.
Yeah, we note the increase in amount invested. I just brush over that 60% to $41 billion last year. It's interesting though that this APO comes after two other events, rights issues that they had in the past, garnering some $9 billion. First of all, what has been done with that $9 billion?
Yeah. That's a good question, Neville. Is it complete? Are you finished with that part of your question? I can go ahead and respond.
I have other questions allied to that, but I need to hear what's happened to that.
No problem. All right. So Neville, what has happened over the last 8 months, I suppose, since our first capital raise, which would have been the rights issue in March of 2019, is that Barita has seen both organic and inorganic growth, and I'll break it down for you. So our general business lines that would have existed prior to, I suppose, 2018 when the business was taken over, we were asset managers, so we had unit trust portfolios, we were a stockbroker, and we give clients general financial advice. Since then, we've launched two business lines in particular that have been capital intensive. One is our investment banking business, where, as I would have mentioned before, we have raised financing on behalf of customers. And that business started about 18 months, but I guess 18 months to June 2020. So from December 2018, we've been in that business. And that has seen us raise over $25 billion on behalf of our customers, Neville. So some of the capital raised via the previous equity offers would have been tied up in that business in some way, shape, or form. We've also been doing a good bit of product development. So we've launched a structured notes program, for example, which has supported the creation of our wealth division. So we have a division now that narrowly focuses on high net worth and corporate clients, and we have been creating solutions for them via our structured notes business. Of course, they do other business with us as well. And that has also involved the use of capital. The capital infusion has also supported the organic growth of the business. So to your point, you will see that our balance sheet is materially larger than it would have been pre those offers. And it has supported ongoing revenue generation from those core areas. So net interest income, for example, you can see from the 9-month results is up almost 100% year over year, reflecting the additional capacity that the additional capital would have given us. So in short, it's gone to growing existing or pre-existing areas of the business, as well as funding the success of new areas of the business that we have pursued over the last 2 years.
Okay, but a reading of some aspects of the previous prospectuses that covered the $9 billion. There's a similarity to the present APO prospectus.
Yes, so the question is, Neville, what's the difference? What's different this time?
There you go.
It's a good question again. So what I would say to you, Neville, is that, the business that we're in as an investment company is one of value creation, right? It is not typical operating company where you see us pursue distinct, named physical products, or we're in, manufacturing or anything like that. We are an investment firm. And what that means is that, one, of course, we create value for our customers via the products that we offer, right? That's in it. But two, we are also an investor. We're a principal investor, and we're an opportunistic investor. So capital won't get lost in the business, doing nothing, right? And that has been reflected in our performance to date. So if you look at the performance, you will see that it has improved markedly as the company has continued to be endowed with capital. That being said, there are only so many and no more things we can do in terms of business lines. So you will see some repetition. So I will be coming to you with new products that may need funding. And I did say that the last time, and I have come with new products. We started a structured notes business. I did say that, I wanted to expand my investment banking capabilities. So what I'm saying this time around is that, one, some of the opportunities that may have existed before, which we have capitalized on, have grown in terms of scale. Investment banking, for example, in the 18 months since inception in December 2018 to June 2020, we would have generated over $500 million in revenue in that area. But we see prospectively a tremendous amount incremental to that in revenue opportunities in that area, right? Which necessitates additional capacity, which capital can provide. We would have discussed in the past, again, creation of new products. We have further to previous discussions, additional products that we want to launch and see. We see opportunities there. And finally, for us, even in terms of our expansion thrust, we see, more compelling and very clear opportunities to expand in terms of even in Jamaica, but also external to Jamaica, which informs the timing and the size of this offer. So there is a bit of more of the same, but this time there is also a difference.
All right. Well, on the matter of the expansion, then you say you want to do an expansion in Jamaica. Your general manager said that we're looking at 2 branches, one in Kingston, one in Montego Bay. Before that, we said Ocherios at another time. But anyway, leave that alone. But $4.5 billion seems a lot to be talking about just a 2-branch expansion.
Yeah, that is in fact true. It would have had to be 2 very large branches, right? So, our GM, Mrs. Paula Barkley, would have communicated at our AGM that our immediate plans for expansion that she chose to name at that time involved 2 branches. And that's because I believe those are very far down the pipe in terms of coming to fruition. But the fact is that we do not think our physical presence in Jamaica would be optimal with 2 incremental branches. So we do have plans that we haven't disclosed just yet. And to the point I made earlier, you can appreciate that we have deliberately highlighted of the 4 areas that we intend to deploy the proceeds. We have deliberately highlighted our local and regional expansion efforts as being the commander of the largest share of the proceeds, because that's where we see the largest opportunity. So it isn't just about expanding branches, Neville. It's about looking constructively at, for example, business opportunities and lines that may be complementary to what we do, whether it's new markets, whether it's new business lines, and whether it's kind of setting those up from scratch, or looking at, people who do it very well and potentially, acquiring them.
Mm-hmm. This is Sean Taylor with me, no?
Sorry?
Who was speaking a while ago?
No, it's Ramon Small-Ferguson. Sorry,
Oh, okay, Ramon.
Ramon,
Sorry.
yes.
I just needed to make that note.
Yeah.
All right. So you're hinting that the local expansion could be more extensive than 2 branches. Anything on the timeline for that? All right, first of all, the timeline for the expansion of the 2 new branches to the 2 new branches, and then the expansion to the other branches that you're not talking about.
So I believe at the AGM or GM would have indicated that the 2 new branches should be up and running within our next financial year. It starts in October of this year and ends in September of next year. I can't speak too freely around the other expansion plans just yet, but those 2 new branches should be on stream next year.
And the regional expansion?
So the regional expansion is
you did say it's aspirational, but I mean that's a bit of a letdown right now when we're talking about
So Neville, what I would say about our presence in the region is that it's already in train. You know, the fact is the business that we do does not have to be physical. So we have already been, you know, through our strategic partnerships, doing business external to Jamaica and creating value external to Jamaica. Our investment banking business, for example, is much more borderless than other areas of our business. So it has seen us raise money for companies that are domiciled outside of Jamaica, right? So to that end, what I'd say to you is that it is clearly intended to be a staged expansion. It has already seen us do, I guess, what some people call kind of suitcase banking, where you are housed in one place and you do business, you do banking type business externally. But what we are describing in terms of our intent will really see us be involved external to Jamaica in a more prominent way. So more to come there, and at the appropriate time, I suppose we will make the requisite disclosures.
All right, I have a couple more questions, but I'll allow my friend and colleague, Mr. Scott, to go ahead.
Yes, Mr. Scott, you can go ahead with your question.
Okay, just asking, when you speak about partnerships, Barita recently acquired a stake in Proven Investments. Would you be using your partnerships or that acquisition to help you build out in the region? That's my question.
Right. Yeah, so it would have been announced that Barita acquired a 5% stake in Proven. I mean, just to speak very generally, we do collaborate with many of our local counterparts in the securities dealing industry. I mean, for example, you would have seen when Proven launched their APO, we were one of their selling agents. So that is a natural part of what we do, collaborating with our counterparts in the industry. And that carries over to respecting the counterparts that we have, in the region and, further afield. So it's a natural part of what we do.
Neville, you had any other questions or anybody else in the audience?
Yeah. Although it hurts every time I hear the word question instead of question. But anyway, the prosecution of the improvements on the IT platform, we were advised even before Cornerstone acquired Barita that there were improvements in train. I posed a question recently, and I was advised that you are adding to what is there now. But also IT improvements were part of the equation in previous rights issues and so on and so forth. So therefore, I'm asking, when will we be complete with this IT improvement, and what sort of I don't want to say redundancy have you built into this improvement, but capacity, excess capacity, have you built into this? Are you building into this new IT infrastructure that would enable you to prosecute your goals in a more fulsome way, and then how far into the future?
All right, Neville. So what I'd say to that is that you're right. Barita is a company that has built a legacy of always remaining on the cusp of innovation, in particular respecting technology. So one thing that not many people know about us is that Barita has its own in-house team of developers and has had that team for some time. I mean, our core system is built and owned by Barita. And that's something that really, I think, gives us an advantage, right? So we don't have an off-the-shelf system internally. That being said, respecting technology, you can appreciate, Neville, that technology is playing a much more prominent role in the effective delivery of financial services these days, right? Additionally, technology is changing at a pace that has never before been seen, right? So, I mean, for example, you can use, let's use cell phones as a proxy, you know, how often innovation is seen on that front, right? So that being said, Neville, for us to sustainably compete in this space, for us to achieve the objective of being able to scale exponentially, for us to be able to deliver our services and our products to our clients, be it in Jamaica or external to Jamaica, at a consistent standard, we will have to be innovating in an ongoing way, respecting technology. So our approach as of now is a phased one. So what you can expect to see is a distinct set of improvements over time, some of which will come on stream in our new financial year. But it is a process that will take place over time, is what I'm saying. And don't be surprised if, you know, a year and a half, 2 years from now, it may not be us raising capital, but you see a further announcement that we are making additional improvements to technology. It's a necessary part of the space that we're in.
Any other comments, questions from persons in the audience? Okay. All right.
So I think this recording will be available to the members of the media. Is that correct? I know some of you joined a little later than others, so you will get an opportunity to review. And I suppose to the extent that there are any residual questions, they'll come via the usual channels. I want to thank you guys again for accommodating us. We started a bit late, but we're here, and hopefully this has been useful.
Yes. All right. So thank you, everyone. I mean, Ramon said it. You know, we are expressing our greatest gratitude to you for coming here today to our press conference. We would like to thank our marketing team for organizing this event. Based on the questions that we would have received, it shows that persons on this call today were paying attention. They actually read the prospectus and they were listening keenly to the presentation. So some of the things I want to highlight coming out of the discussion here today. Barita is in the business of growing, and you know, when we grow, we are going to need financing. Barita intends to expand, in various ways. We spoke about the expanding of our underwriting capabilities as it relates to investment banking, expanding our footprint. And we anticipate when we're talking about, local expansion, that this will be done by 2021. When we're talking about regional expansion, this is something that we're big on, and we do a little bit of it right now, and that is in relation to suitcase banking. I'm confident that this information that we would have presented here today will give you a better understanding of Barita and how we like to term it here, Barita 2.0. As you continue to do your assessments, and if you have any further questions, as Ramon would have indicated, please feel free to reach out to us and we will assist you. At Barita, our mission is staying ahead, growing wealth, creating value for our clients. Thank you.
All right. Thank you very much, guys.
All right.
All right. Take care now.
Yeah, man, respect.